Hello and welcome to The Chart Show. I'm Victoria Scholar, and each week I'll be sharing my analysis on three key stories that are getting a lot of attention among investors. I'll be breaking them down not just from a fundamental perspective, but with technical analysis on the charts as well. So this week's three charts are BP after its profits topped analysts' expectations, Standard Chartered, which slumped 8% on earnings, and Flutter, which downgraded its outlook. It's rather awkward timing for BP in that its profits from oil and gas come on the same week as the COP26 summit, of course. It achieved three-month profits of $3.3 billion, beating analysts' expectations thanks to a sharp gain in oil and gas prices. BP has predicted that the higher prices in the gas market will continue and oil prices will be well supported as well. BP said it's spending another $1.25 billion buying back its own shares in a boost for investors after completing its $1.4 billion share buyback program in the second quarter. Let's take a look now at the chart, because following a multi-year downtrend accelerated by the pandemic, shares in BP have finally started to enjoy some positive momentum. An ascending trend line has been in play since the lows last year, with higher highs and higher lows, with the stock rallying by more than 80% since the trough just 1 year ago. However, there has been some profit taking over the last week. The next major resistance hurdle is at 394, which would close the gap from March 2020 and potentially lay the groundwork for an extension of the ascent. Meanwhile, there's near-term support around 336, the peak from June of this year. Standard Chartered slumped to the bottom of the FTSE 100 on its results day, shedding more than 7%. The UK bank, which has a heavy focus on Asia, reported earnings and revenue numbers which were broadly in line with expectations, but the management commented that there were supply chain problems and also warned about a potentially uneven economic recovery. The stock has sharply underperformed the FTSE 100 lately. Shares in Stanchart are basically flat year to date, which compares to more than 10% gain for the FTSE 100. Let's take a look now at the chart of Standard Chartered, because from the peak in December of 2019 to the trough in September last year, the stock shed more than 50%. This year, the shares are basically flat year to date. Before the sharp sell-off on Tuesday, shares were trying to rally and break through gap resistance from when the stock gapped sharply lower during the pandemic-driven sell-off in March last year. And that area of resistance coincides with key round number resistance as well at 500 pence. A break and hold above that level could potentially spur a move back up towards 530 around the peak from May of this year. However, now it looks as though more price action on the bearish side is coming through, or perhaps more sideways trade, with support levels around 460, with a break below that level potentially paving the way for a move back down towards the September trough, reversing recent gains. Now, Flutter is the global sports betting and gaming company which operates Paddy Power, Betfair, Sky Bet and others, and things have turned a bit sour for the company. The bar was set high in August when sales jumped by nearly 30%. However, we saw the company downgrade its outlook this week for the rest of the year on the back of what it describes as unfavourable sports results in October. It's also temporarily exited the Netherlands in another blow amid regulatory headwinds. Nonetheless, the US continues to be a bright spot, which saw sales grow by 85%. Putting that into context, that compares with a 5% drop in sales in the UK and Ireland. Let's take a look now at the chart of Flutter, because the stock has gained by more than 130% since the pandemic trough in March 2020. However, it has pulled back from the high earlier this year, with lower highs since the peak in May. It looks as though the next key support, if we continue to move lower, is around the trough from July. If we see a break below, that would create a lower low and a continuation of the downtrend seen for most of this year. The next support would be around 110 at the 50% Fibonacci retracement level. A break below could see further declines.